Good evening, guys. Ken at Tortoise Capital. It is the strategy podcast for June 24th, 2020. Today was the perfect day to be exploiting our tactical techniques. We had a market that started in sideways quiet channel today, made a decisive move down after a big gap down, and the supported fall crossing, the supported winter crossing, the collapsing dragon in all of the frog champions dominated today. And the good news is, even those who were trading the supported spring crossing had opportunities to actually make some money today. And even in the ones that didn't make money, the amount of losses were much less than what a standard buy and hold would have been. So on a day when the rest of the world is beginning to wonder, what in the world have we hooked into? Is this the beginning of the next leg down? We should have had our best day in the last month, or at least in the last 10 days. Because those last 3 days in this 10-day period were these kinds of days also. And if we've forgotten that, then that's just how quickly your brain adapts to the new normal of the last 6 or 7 days, which have been sideways and basically in a channel. So we started off today inside the dragon, big gap down, horrible sell-off, 1.5 ATR, and barely recovered at the end of the day to close just below the Bollinger Band mean. So that was a large directional day. It wasn't even as large as these 3 days when we should also have exploited. But today was a day to exploit. Those 6 or 7 days in between here, these are all of a type. These are all low volatility, low range, sideways, and see what that did to the dragon. Look how responsive the dragon is after that long, powerful fall into the summer. The dragon got sideways within about 6 or 7 days and then has been pointing the way down. And today, gap down, breakdown through the Bollinger Band mean, and a slight recovery. That day is tailor-made for us to be contrarian traders and have no overnight risk. Today was the least surprising follow through. We have a 10-day range here that is now about 6.25%. The 10-day high came down from here down to here now. So here's our 10-day range, down to a 10-day low at 296.6, 10-day high at 315.8. The 10-period regression line is still sloping up, but now price has closed well below that as part of an aberration. That's an abnormal move away from what had been a tentatively bullish move over the last 10 days. Up until today, it had recovered fairly nicely from these tests of the low. And today, it was the sound of a crack. I want you to remember that every day that you're in that market, you are walking on thin ice. And you don't know how thin it is until it cracks. So we can set the different levels in here to figure out where the scaffolding is and where the safety valves are and where the different points that confirm each new level of support and resistance are. We can frame all those things out. But when thin ice cracks, you cannot be surprised. I'll have more to say on that. So today, gap down and got smashed in the sell-off. The dragon is now sloping steeper downward. That's the dragon extension here. And we closed below the skin of the dragon. At a minimum, we talked about this at length yesterday about the RLXD, the supported fall crossing entry, when it breaks below the skin of the dragon. And today it did that. So all other things being equal, being short at 306 was an automatic. That's automatic. And the move was straight down from there to 302. So that's $4 on 300. That's a 1.3% move in a direct line down after it cracked below this level, after it had already moved 1.3% just to break out of the dragon. So, legally speaking, that's a move from 310 down to 302. That's $8. That's 2.6% in a straight line fail. So we've got to be able to exploit that, especially when the ATR percentage was only 2.2. So that's more than one ATR in a single directional move. We've got to be able to exploit that intraday. So our 3-day blue box, the days of this week, decidedly weak. Not as bad as last week was. And so when we look at breakdowns from here, from the low of the day, we'll see the RL90 at 300.64. That one looks decisive to me. This RL90 and the fair value of 299, that's in a nice little cluster of 300. That psychological level of 300. If that breaks, then the only thing holding it is a 10-day low at 296. That's another 1%. The Z1 at 294, and then there's nothing until it comes all the way back here to 285. So we've cracked through quite a lot of technical support here, and the downside is screaming for attention. PSAR extension still pointing down. The RL30 rolled over today and is now sloping downward. So this is now an owl entry on any break of this. That's an owl entry to the downside. And then, in my view, the owl's target is the Z2 down here at 280. I'll call it the dragon belly, 285. Everything from the low of the day down to the dragon belly is tactical opportunity for the owl. And if it breaks below the dragon belly, Luke, if it breaks below the dragon belly here at the purple dot, what would we call that pattern? Collapsing dragon. You are correct, sir. So in a sense, this is a supported fall crossing. It's also now an owl. And then if it breaks below that purple dot at 285, it's a collapsing dragon. And then the fun really begins, because it's $40 below that, actually $60 below that, back to the previous sell-off low. And that was before the 15 trillion were printed. So I think that's going to happen. No, I have no idea what's going to happen. I'm not even about thinking about what will happen, but what could happen. And so I'm just framing out those different decision points. I'm taking my directional bias right now, which is 0. I have no directional bias. Why is that? Because we've had a significant pullback from the 10-day high. We just went into sideways normal. The risk Z is suggesting there's no advantage for a long side swing. The previous time that it explored these lows, the institutional buyers came in with treasury money and beat the shorts into submission and drove it high again. But now we're coming down to another test. And do I think they're going to let this thing break down further? I have no idea, but I know they don't want to. Nobody wants that, except the nihilists and the Marxists who are burning down cities. If you think that protesting is about social justice, then you're not listening to what they're telling you. In Chicago, those activists are saying in public, for the record, we are trained Marxists and trained revolutionaries, and our goal is the disbanding of police and civil authority. End quote. So if you think this is about social justice and peaceful protest and civil disobedience, you would be wrong. So as a trader, my only concern is how to frame this in either direction and make good decisions to protect capital, which is my property, and I will protect my property. And I have the means to do it with the use of scaffolding and critical thinking and trained judgment in times of stress. This is what you train for. This is what you prepare for. All right, so what's the case for the upside? Well, to get through the upside, what we would have to see is a recovery through the Bollinger Band mean at 304.5, the southern skin of the dragon at 306.3, the spine of the dragon at about 308, the upper skin of the dragon and the high of the day, which looks like solid resistance to me, at 310. And therefore, if it can get above that and the fair price of the RL10, well then, the 10-day high is then within range, up here around 315, and then the PSAR flip Dragon Peak at 316. So there is an upside to this, and that's the tactical price levels it's got to get. My expectation was that would be not so much a runaway upward move as it would be a grind with many tests all along the way, in the same way that we saw that here. In the past 7 days, it couldn't break through that. And that was without having one more panic day in hand. So we'll see how strong that urge to fight their way north will be. Who are the brave sectors and souls going to take those positions and hold them overnight? Not me. There's a lot of brave people in the world, or people that know a lot more than me. So, time for them to step up. Otherwise, the path of least resistance is down. And reading the Drudge Report and the beginning of the second wave, all-time new high in number of new cases. And every state that opened early is regretting it and now discovering, oh yeah, the price of being stupid in public in the cause of freedom is death. Oh yeah, that's right. Idiots. Oh, was that my outside voice? Sorry about that. All right, so there is I have no directional bias on this. There is a critical state right around the Bollinger Band mean, right from the open, with an equally likely probability of extremely large moves in either direction in short periods of time. That is trader nirvana. That's what you live for as a trader. I'm back here in the back of my head thinking about the daily check on learning, which says, hey, that decision to move to cash in the core back on Thursday is now not looking as well. It's looking a little better, but I'm not going to judge a 6-month strategy on the basis of the first 3 days. But still, everything is connected in some way, at some level. The fact that I don't have that risk on allows me to be a little more clinical about the opportunities here, because I'm not also working on figuring out what those hedges are going to be and all that stuff. And then that can be solved pretty easily and then set aside. But I would just as soon have that off the table. Because have you ever seen hedges fail? Yes. Yes, I have. All right, so let's take a look at what worked today. Two things. In one sense, two things on my list worked today. The two things that are in the green. So VXX is up 6.6%, and in the summer, Treasuries are up 1%. They are in the summer for monthly, and daily they are in the spring. So there's an opportunity there. And then we look down here at SPY minus 2.5%, the Dow minus 2.6%, the Russell minus 3.2%. So the S&P held on to its value better than anything. Now we're going to go look to see what got crushed, but the contrarian in me also wants to say, well, which were the things that lost less today? And some interesting names. Walmart minus 0.6. So maybe their losses were already baked into the cake, and maybe that intermediate bottom is already in play. So when I go look at Walmart on the daily, that doesn't even look disastrous. That just looks like noise. It just barely got into the dragon as opposed to breaking down below the dragon in a significant way. And the dragon is still rotated up. So Walmart, in the back of your mind, should be something. Amazon, barely touched. Wouldn't have even known today was a bad day in the market. Nikola Motors, that's so speculative, it's almost disconnected from the market. That is a pure speculative play being controlled just by the people who are involved in that trade. That's good to know. The next little group, McDonald's, Intel, Cisco, Home Depot, Apple, Pfizer, Microsoft. If that isn't a list of the winners, I don't know what is. So McDonald's recovered pretty nicely after a quick sell-off. Intel holding and didn't break its 10-day low. Cisco, same thing. Clean energy, holding at the top of the dragon. And now Apple. Again, you don't even notice that Apple, you wouldn't know from looking at Apple's price that today was a challenge. And Microsoft almost in the same condition. So those two tech leaders, Apple, Amazon, or Microsoft, excuse me, so without even leaving the letter A, Amazon and Apple should be emblazoned in your mind. As we go further down the stack, consumer discretionary, Japan was a little bit better, but that's really about it. Now, as we look at the things that got progressively worse, I'm just going to go right to, I'm just going to go to the bottom of the stack and find the things that got just crushed. Because those are going to be the ones that are of most interest to me, because not only did they have semi-panic selling in the markets contributing to them, but they also were worse on the basis of people losing confidence in the companies. So that's going to be Simon Property Group minus 7%, U.S. Steel and Boeing minus 6 and 7%, Virgin Galactic minus 6, Cliff in Brazil minus 5, Tesla, Nucor, Finance, Facebook, all of those guys are getting crushed. So those are all at least double the pain of the S&P, and XOP is especially instructive. So that's XOP right there, and it broke down below the 10-day low through the 90th, all the way down to Z1, all the way down to $50. That's what a 10% sell-off looks like. 9%, I should say. So when the energy sector cracked and exploration cracks even more, that's what a collapsing dragon looks like right there. That big yellow dot is a Z3 breakdown. And so that's 53.50. And then the supported spring crossing recovery is at 51. So that's 250. That's a 6% sell off on a single position. So we got to be able to find the mover. So how do I find the movers, you ask? Here's a note sheet that you can download from Patreon and just start making some notes to yourself. Start with the list on the left. Market feels like it's going down, big gap down, selling off hard. Sort the things on your watch list by percent gained or lost today. Find the S&P. Oh, there's the S&P. Read up. And then start reading left. Win, Alcoa, Simon Property, Devon Energy. This was at about 90 minutes or 2 hours into the day, and they got smashed even further from here. And all the ones that are at the top of the list were further crushed all day. So they didn't lose that painful position at the top of the stack. So the very first one, Win, WYNN, Frog Champion. This is what the morning move looks like. Is there any pattern that we have that could trade that? Yes, there is. There's one. There's a supported winter crossing. And then as many of those as you, every time it goes from spring to winter, oh, there's one. There's one. There's one. So there's 5 low risk entries that dominate. And you know what worked pretty amazing as a stop? The Bollinger Band mean. That works pretty good. XOP, yeah, we've already seen. Alcoa, for crying out loud. Hybrid Frog, supported fall crossing or winter crossing, another winter crossing, fall and winter crossing, collapsing dragon, then a nice little supported supported spring exit. And if you took the supported spring crossing, actually there was a chance to make some money in there. But on a day like today, when the ice cracks, find the movers. So this will get you started in how do I find the movers? That's how. That's a way. So how do I manage that? Here's how I manage that. On my screen, I have a number of symbols that I track. The ones that you see the letters are always on my screen. I always have SPY right next in the upper left-hand corner, right next to the stack. And then across the top, I have the indexes I care about for the U.S. markets, the S&P, the Dow, the Russell, and the volatility. There's my two symbols for the kata, DIA and EWZ, so I can keep my eye immediately on them front and center. And then it just may be that the Russell or Mexico is cleaner to see. So that little cluster of four, that may be all I need today. I've got the volatility on the top right so that I can see if there is early indications of a reversal in the volatility regime. Over on the right-hand side are my old reliables in XLB in the metals. Remember those high-tech trading monsters like US Steel and Alcoa and Cliff Natural Resources? Remember those high-flying tech companies, Frog Champions? So I can see which of those in the metal sector is having the best day. Then I have Brazil versus Mexico in the middle for my non-US, non-first world Frog Champions. My next stack down in the middle, Wheaton Precious Metals for gold, silver proxy, Devon Energy, Simon Property Group for commercial real estate. And then over on the left-hand side, I have room to rotate some other things in that are of interest from my stack as I see the day unfolding. I might be interested in the finance sector because maybe it's doing better or worse than the S&P. And then that might be JP Morgan and Goldman, or it could be FAS, FAZ, or there could be another target company in here like Win or Virgin Galactic or Nikola Motors or whatever seems to be moving. When I find the movers, I can just drag them over in here. And now I have an all-purpose. I only have a span of control of 4 maximum symbols that I can have a position in at one time. But I can watch that array for tactical indications, like I'm watching 16 patients for their vital signs. And then over on the left-hand side, I have the herd. And I don't look beyond those. Everything that I need to be able to reliably find some number of movers to bring them in here to start exploiting, I can see on one screen. One. And then I have a number of old reliables and frog champions that represent a variety of large cap, small cap, conservative, aggressive, tech, non-tech, first world, third world, precious metals, and then a couple small caps like commercial real estate and a domestic energy guy that are just cool, that are kind of immune to some of those larger moves. So that's my decision board right there. That's how I find the mover, and that's how I frame the trades, trade the frames. So where you got to get to in your head is when you look at a chart that looks like XOP right here. When you see that, what should be screaming at you is a lens, a set of goggles that looks like this. I want you to notice what's happening inside each of those big, fat, purple circles. In the first one, at yesterday's close, everything was tightly compressed at 55.25, including the RL270 and then all of the other regression lines in a super pinch right there. And then a big gap down, this big, and then sell off here on this big red arrow. And then for the next hour, it did nothing but trade in a tight channel along this blue arrow. And then that whole period of time, the RL270 simply comes down quickly in a linear fashion and rejoins everybody inside a super pinch. And would we be surprised if it broke out of that Z3 pinch to the downside with the rest of the world on fire? No, we would not be surprised by that. And then there is 1, 2, 3 legs down with those 3 thick red arrows. And then the only little rebounder pauses to refresh, these 2 little blue arrows, there was not even a serious run to the upside. I'll grant you maybe that little bump right there, maybe you could call that, but if you took that long, then you should be scratching it and getting short once more. And that's what 3 legs down looks like. And the size of that is even bigger than the size of the sell-off from the gap down. So there was a question in the chat room today which asked, is a big gap down part of a harsh winter? The answer is yes. Yes, it is. It's as if there was a big red candle from the overnight trade and price moved. So it's a big red candle down, and now you have a posture. You could have tried a supported spring crossing here. You could have tried that. It would have immediately failed. If you stuck around longer than this because of rules, okay, I accept that. But right here, you've already, when it crosses that blue arrow, you've already got a supported fall crossing. En route to a collapsing dragon. That's not a fall crossing. That's just a failed spring. But at this point, when you add in the daily status that says, hey, that thing was teetering on a knife edge anyway, and there was a big gap down, and it couldn't make a new daily high and it's starting to roll over, don't stick around. Look at the big purple arrow. What is it telling you? It's going down. That's where the power is. So even if you took a fractional loss on that one, then the proper execution of the collapsing dragon, the Z3 pinch breakdown, and even adding other positions if you want, easily pays for that. But then just notice what that RL270 is telling you. Now, this is on a 1-minute chart. So the RL270 on a 1-minute chart is the RL30 on a 10-minute chart, is the RL10 on an hourly chart. That's the fair price on an hourly chart. So it's telling you what price is doing in an orderly fashion on the higher time frames. So when you do your daily frames and you find those different price levels and you bring those into your chart, that's going to help you. Now, just to make us all feel sick, just a quick look at what the daily trades on Simon Property Group looks like. Find the mover in which direction is going to win, for crying out loud. Brazil. So here's the S&P. So what's the market doing? It's making everything fail. So the market had 3 big legs down. So the question is, what should I do on a day like today when all of the supported spring crossings are quickly stalling? Well, go short. This thing moved minus 3%, which is 1.5 ATR in a couple hours in the morning session in 3 large legs down with readily observable patterns that we know. And we should not have a directional bias. We should have a trading plan that executes in both directions based on what price is telling us. That third leg was bigger than the first and second leg. So that tells you what kind of day that was. When the feed forward is reinforcing and getting bigger, a lot of times we see to the upside that first breakout and move out, that brave move, is the biggest leg. And then the second leg is a little less, and the third leg is even smaller if we even get it. That's what it looks like on the upside. But on the downside, because of fear, it's not unusual to see those legs get larger as each little retracement fails. Then more panic comes in and they pound it to try to instigate more panic selling. So that's what the market did today. That's Alcoa. Oh my God. Gracious. And UDOW. So when we look at our list of standard usual normals, the frog champions on this next chart, every single one of those things was decisive today compared to the S&P, which was also decisive. Every single one of those was massive. So when we have an abnormal move like today, greater than 1 ATR percentage in one direction right off the bat in the morning session, we've got to be able to recognize that, particularly when we know that the market is in this critical state going into the day. When those tripwires hit, you got to shift into abnormal conditions, apply standard work for abnormal conditions. It's like when you drive the car in the winter and there's snow and ice on the road, that is an abnormal condition. So what you do is you engage your winter driving protocol. That is normal work, normal standard work, winter driving protocol for abnormal conditions. That means I dress for the weather. I've got emergency kit. I'm going slower. I check for minimum safe stopping distance. I make sure it's a mandatory trip I got to take. I try to find off hours to go. I wait to see what I watch the Weather Channel to see what's going on. I listen to the police scanner. I budget much more time. And I rehearse my kids on how to drive in snow to the point where I take them over to the parking lot and put them behind the wheel. And then I induce skids and slaloming so that they know how to handle a car when it loses traction. So that becomes not, so the first time they do it is not when their life depends on it. So in the Shingo model of management, we have to know the difference between normal conditions and abnormal conditions. And then we have to create standard work for normal conditions and standard work for abnormal conditions. So abnormal conditions is not a time to be rolling your own. But we know what abnormal conditions are, and then we should apply the standard work for abnormal conditions. Doing even more aggressive pursuit of the movers and trading in the direction of the market, especially to the downside. That's what I want to say about all that. So today's the kind of day we got to be ready for. What kind of day do you think it's going to be tomorrow? More of the same? You'd be correct to have that assumption, to be prepared for it. What would be the least surprising kind of a day tomorrow? No gap, tight range, and no directional move. That would be the most surprising. That kind of day we're not going to lose much money on, because even if we get on the wrong side of it and there's false starts, there will be a bunch of little pinpricks. So what? But if it's a large directional day to the downside, the things that we just reviewed, that's what it's going to look like. And those are the patterns you want to trade. If it's a big move to the upside, what's it going to be? Supported spring crossing, supported fall crossing in the usual way. How am I going to find the movers? The same way we find them on the downside. Stack is sorted by percent gained. Find the S&P, read up. Have enough targets framed so that one of them or two of them is going to be moving. You only got to find one or two movers a day to exploit to get your daily goal of 2 position sizing R, so that you can meet your weekly goal of 2 position sizing R net. All right, so today, a 16 on the 3-day NDX, sideways normal conditions, weak trend, risk off conditions for risk Z. How good is the risk Z at warning us that times had changed? That the odds did not favor upside moves. How good was that? No channeling or overreactions. 10-day max pains and 10-day min pains. I'm just going to talk about the Dow 30 on this one. So the max pains are the ones that are suffering the most. These would be the least surprising candidates for continued sell-offs. Boeing, American Express, ExxonMobil, JP Morgan, Nucor Steel. Not surprising at all. 10-day min pains, these are the ones that have resisted the sell-off the most. Walmart, Nike, Microsoft, Amazon. Dow 30 tactical summary. Intel, oddly enough, was a doji today. Had a low range day and is 2.8 to 1 on the auto framer. So that's a note. Winners today, McDonald's, Procter & Gamble, Walmart. Losers, ExxonMobil, Dow Chemical, and Boeing. Lots of RSI2 single digits, which means they're all suffering a 2-day washout kind of a sell. No surprises there. ETF tactical summary. Utilities and gold were in dojis. Big losers, oil exploration, energy, Brazil, and the triple Dow. That would not be surprising if that continued to be the case. Treasuries had a good day today and is a supported spring crossing. Daily pinch and stretch. The most positive Z stretches are the ones that have the best relative strength. These names are not surprising. Apple, Microsoft, Brazil, gold, tech. Most negative Z stretches, these are not surprising. Pfizer was bad yesterday, was worse today. Verizon. Yeah, that's about all I'm going to say on that one. Auto Framer is going to show you a lot of candidates today because today's sell-off now makes the 10-day high a more lucrative target to the upside. But you'll notice that the risk to rewards today are less than they were yesterday, precisely because of the expanded range, because this is based on the size of today's range usually as the as the risk. So whereas yesterday we were seeing things at 4.5 and 5, and 2 days ago we were seeing them at 8 and 9, now the best one is 3.5 to 1. So as I read down the top of the stack, Pfizer, Morgan, Merck, oil exploration, XOP, finance, XLF. So I like that one. RLFF, the regression line fractal framework, top shelf. These are the deep value plays. These are the ones that, when things get better, offer the best potential swing trades for supported spring crossing. So that's going to give us things like GE, Coke, Verizon, JP Morgan. On the in the bottom shelf in the red, the symbols most above their ATR, or most ATR above their RL270, these are the ones that offer or the relative strength leaders. Let me say it that way. Apple, Microsoft, Home Depot. So this is another way to find relative strength leaders. That doesn't mean these are going to fail and come back. It just means that there's reasons why these things were in great shape. Daily squeeze, not much here. Walmart and Intel, though, of interest, and even the Gilead Sciences. Because they resisted the sell-off, their range was small, and now that means on a relative basis there could be nice one-day pops in them. So Walmart and Intel, on the basis that they didn't fail as much as everything else did today. Yeah, everything's in the fall. I want to go right to the NDX summary. So this just gives you an idea of what all failed today so much. And this is sorted again by the 10-day look back period. So I look for relative strength leaders at the bottom. Look how good Nike, Microsoft, and Apple are. And then gold and treasuries and tech among the ETFs. The big underperformers. So if you're looking for an easy way to find candidates that could suffer some more tomorrow, take a look at the top of the stack. Verizon, American Express, Pfizer, Chevron, US Steel. You could even focus in on the 3-day and say, what are the worst numbers in there? Oh, things like Walgreens made a 3-day breakdown, Johnson & Johnson, 3M. Then over on the tech side, XOP, I don't know if you got to look much further than that one. Holy smokes. XOP and energy and real estate. Foreclosures coming. And the rest of this is just market conditions and it showing a continued rollover. That's everything I want to cover on that one. I'm not going to go through the charts from the chat room I guess I will. Most of the kata charts are correct, and that had you trying to trade the supported spring crossing on a day when we want to be short. But that's the difference between kata and live trading, is that kata is trying to teach you how to trade it in a certain way. So today was actually a good day to practice the kata on a day when you're going to see a lot of no follow-throughs, right? So let's see if we can call those up. Oh, yeah, here, let me, before we get into those, I did want to cover some of the psychology comments from Patreon today, because there was a lot of, I guess I would call it stream of consciousness kinds of discussions today. So, the trader said to me, hey, Ken, I've been meaning to ask you on a pocket entry. So on the upside, this is like a supported fall crossing. I've noticed that the RL30 above price can often act as resistance, and that price sometimes fails to follow through and then reverses, which is a good sign for a supported winter crossing. I've not ever seen you use the RL30 as a trigger on a pocket entry. Would love to know your thoughts on it. Have you noticed as well that that RL30 can act as resistance, or am I seeing something that's not there and risking a very late entry if I use the RL30? So there's um, a number of things going on in that statement. So I'm going to do what I always do when I I get the wrong side. Let me put it over on this side so I can get the snip. I want to draw a picture so you can see the words. Sorry, just a moment. I'm trying Microsoft Ink right here because it seemed to be working pretty well on the with the pen. So here's what I want to diagram. All right, let's see if we get this thing going. All right, so on a pocket entry, you notice that the RL30 is up here. Oh, that's not any good, Kenneth. Sorry. There we go. Let's try it with. Thank you for your patience. So what he's noticed is that there can be, come on, pen, an RL30 rolling over like this. And he's noticed that, we could have price down here in the river, something like this. And I'm going to draw price as a green line here just for distinction. So, that maybe that RL10 came down here and then came back up into here. So there was some long, and he said, hey, so if this is the pocket entry to go long, have I ever noticed that this black line up here could act as resistance? Or what are my thoughts on waiting for it to get above the 90 or above the 30 and then waiting to go? Well, I'm going to be, if that thing works, it's going to get through that RL90 and keep going, and then I would begrudge the loss of that piece of gain. But I want you to know that the slope of the RL90 or the RL30, excuse me, is the health of the trend. And the only way that you can see the RL30 get up here and start to roll over is that there had to have been a really strong move to the upside. So I want you to remember that we define the beginning of trending behavior. First of all, if we start with a sideways quiet channel, we have the price and we have the RL30 and we have all the and all that price action is inside here. And then things start to change and price leaves the river. And then the RL30 leaves the river, which is nice. That's 2. And then the last thing that leaves the river is the RL90. And when the RL90 leaves the river, bang, we have the beginning of trending behavior. So all the way up that stack, all the way up the stack of price, the RL30 is lagging behind the RL10, which is pretty much tracking with price as it goes up, right? And then something happens that causes, the RL10 to come under, and then it's going to reverse and start going up. So there could be some time in here where we notice that the RL30 is the top level indicator. Where have we seen that lately? Oh, we saw it right here in the market health check itself. So this whole RL30 is acting like a lid on this pressure cooker. It's acting like resistance, and now has started to roll over and is shaping down, which is why this has now become an owl entry, why this was the supported fall crossing, and then this would be, a breakdown below the RL10, and then this one would be the collapsing dragon. And in that whole period of time, if that happens, this RL90 will continue to roll over and be the health of the trend, and the RL30 will roll over from here, and at some point it will become, it'll turn red in the winter, and everything's going to go down together until that harsh winter now becomes the beginning of a supportive fall crossing. So that's what he's observing. So his real question to me was, have I ever noticed this acting like resistance? Yes, all the time. That's what it does. It sort of marks that upper limit of what's feasible. And remember, this is on a daily chart. So the RL30 on a daily looks like the price, the RL10 on a weekly. Or if this was 1 minute charts, that RL30 is the price on the 3 minute chart. So everything is fractal in that sense. So as I started replying, that was the image in my head that I wanted to talk towards. So let me get this a little more easy to read. So yeah, you're describing a supported fall crossing. When it works, that fall crossing, it's the second leg up, and that's a good thing. So that's the case where you have something that is a, price would have done an up, down, and an up. And so that second leg up is what happens. But when that fails, as you notice, that becomes a supported winter crossing, ultimately an owl short, then a collapsing dragon. Think about the conditions that had to be in place for the RL30 to be above the river and starting to arc overhead like a rainbow with a pot of gold on the other end when it comes back to Earth. It's like at the end of that trade, which is going to be a collapsing dragon, and you end up cashing that, there's going to be a pot of gold in that. And that's the end of the rainbow that looks like the RL30 after it rolls over and comes back to Earth. So there had to have been a strong summer that got the RL30 up top. But now there's been a weakening of the previously strong price in RL10, which is now pulled back to the river for a moment after a period where it gained, and now it's paused. When they resume the upward move, a continuation pattern, yes, you have a pocket entry, and we would call that the supported fall crossing to the upside. So when you see that RL30 overhead, you might think of that as the sunset or the twilight, and think about owls at twilight and sunset just getting ready to start hunting. So in the twilight, yeah, you can go hunting, but you should feel that the end of the day is coming in the twilight, and that the night hunters take a different form, and animals behave differently at night. and a new breed of hunters coming out at night. And those are usually the apex predators who are going to ruin the day of the unwary, unsuspected, simple-minded herd animals who continue to graze, blissfully unaware of the impending doom, and taking comfort in the law of large numbers that it probably won't be me. So I want you to remember, for the herd animals, their species DNA doesn't care about the individual, only the preservation of the herd. And so the incentives for the herd behavior, for survival, for the survival of the herd to persist and propagate, is what DNA is optimized for. And most of the time, animals evade the predators, but not all of them and not all the time. And the predators are competing with each other for survival. So all these orcas and sharks and tigers are competing to feed on the herd animals. And the balance is maintained in that competition as a result of exertion and constant adaptation. So if you want to be a herd animal, then buy and hold and believe what you read and stop reading. If you don't want to be a herd animal, you better decide where in the ecosystem you're going to be. You can stand aside and then slowly get left in the dust, because the biggest risk of all, it's not even a risk, it's a mathematical certainty that if you don't participate in equities, you will not build wealth unless you have other things, business and real estate or whatever. But if you're not playing the game, then you're not going to ever win the game. So that's the law of the jungle that in the Jungle Books, Bagheera and Baloo the bear and the wolf pack taught the man-child so that he could survive the tiger. So in the twilight, where we are right now, is when our senses and reflexes must be at our best. The Night of the Hunter is a movie that you should watch to get that sense. Film noir movies from the 40s, 50s, and 60s give you a very good feel of time pressure and the smell of desperation and the sound of panic. That's what everybody resonated with at the emotional, visceral level. That's what it meant to be human in the 40s, 50s, and 60s. Having grown up and survived the Depression and then the World War, and having your parents having survived World War I, then the Depression, then the World War. That's why film noir was so powerful, because it spoke at a visceral level of gut emotions. And we don't have any equivalent of that. What do we have now in our movies? We have bullshit and superheroes. So you ought to watch The Maltese Falcon and watch Humphrey Bogart, his face and mannerisms. He is an apex predator, or one who won't be trapped by apex predators, but is not a herd animal. And you can see how he's prepared for every contingency all the time and instantly shifts from role to role as needed. I'm going to watch it again tonight. So bottom line, the RL30 is the health of the trend. Think about it. It's the fifth criteria in the OWL entry, that you're fully ready to go in the other direction when that slope changes, in this case, to negative, or changes from sideways to positive. And that's exactly where we are in the twilight. So today is a pretty good example of the opportunities at twilight in the time of change. So here were just some stream of consciousness notes from today. I just got to say, a big gap is a big red candle. It's a harsh winter. The big insight for today should be, you started the day with no directional bias. You finished the day with no directional bias for tomorrow. But today should have been the easiest directional trading of the last 10 days. The market was in a critical small range state, a critical state. Big gap down, then it starts breaking down, crashing through the daily support levels. This is how fast I was trying to type today. I can't even. Oh, how embarrassing. So each little collapse, each failed SSC, each confirmed supported winter crossing, is confirmation of a downward move in an increasingly volatile move. You should be going short, 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 short. Collapsing dragons, supported winter crossings, get your attention. From the opening in your target of choice, you should know what the range stat move to the downside is, because that gives you the maximum reasonable intraday move to the downside. Which way is the tide moving? Just get carried along. And we talked about that exact scenario the previous night. And today, the S&P had already made an ATR move in the first hour, and then almost 2 ATRs by noon. And then the lunchtime stabilized, and then there were some directional moves in the afternoon. We should be dreaming of this kind of day and exploiting it. And I realized that I screwed up. I should have made the supported fall crossing and supported winter crossing, or the collapsing dragon, kata number 1, because that's probably the biggest shift in mentality that you have to have. So I should have just started that. But it's kata 2 and 3 and 4 right there. Target acquisition goggles. When you're in the middle of that, put on your target acquisition goggles and leave them on. Remember, every support level where it's stabilizing and it's going to try to turn into a supported spring crossing, that's thin ice. Walk carefully, especially when it feels very safe. There's no ice spiders, but imagine a trapdoor ice spider. So you're walking along the thin ice, and that little guy is underneath the ice, chipping away from the bottom, so it gets even thinner on your next step. I hate those things. So, thinking about ambushes, nobody survives a properly constructed ambush unless they want a couple of you to go back and tell the tribe. How do you know what the sound of an ambush is half a second before the explosions occur that triggers it? It's a beautiful, perfect silence and no worries. So you could just imagine that some gang of thieves and ruffians and murderers are on their way to go commit mayhem, feeling good about the violence they're going to go conduct somewhere. And then they walk into the kill zone, and then the next thing happens, and then it's over. So somebody asked me, why are you always talking about risk management? Yeah, I'm always droning on about risk management. I'm not trying to avoid risk. I'm trying to find it and live right in the middle of it, because that's where opportunity is. So you got to be able to manage it. That doesn't mean avoid it, although that's one way to manage it, is to avoid it, if you think you can. When you find yourself in the middle of an ambush, the only thing that gives you a chance of surviving is to turn and immediately attack with everything you have right into the sound of the guns. You attack into it. Anything else gets you killed instantly, if you're not already dead. So when you think you're going out to set up an ambush, there's guys out there setting up ambushes for you. And when you're a soldier, the only way you can survive and maintain what would pass for sanity in an insane world is that every time you go off base, you already internally acknowledge that you're dead each and every time. You make peace with that, then you go do your job. And that there's a freeing function. And that's what the experience of emotionally losing the full 1 hour position sizing stop is for, so that you can already experience by far the worst possible outcome of that trade. All of you who have been working with the kata, how many of you have taken anything even close to a 1 position size R day loss? None. 0 of you have even come close. Some of you have made more than others. Some days we didn't make anything. Some days we made a lot. Some days Ken Hum pulls in 30R. But nobody is losing 1 position sizing R on any day. Now, when you leave the base camp and you go out, you accomplish your mission and you bring everybody home, dead or alive, everyone, no exceptions, and then you do the full accounting at the end of that. That's the after action review. So the rest of this was me just ranting. But that's what I want to say. That's the mindset that I teach. You don't have to have that mindset. There's other mindsets you could have. That's what's worked for me for 40 years. That's what I'm competent at teaching. That's what I wanted to say about that. If it sounds like I'm ranting tonight, I guess I am. Like a maniac. At least I'm your maniac. I'm on your team. Try to find today's trades. I won't remember whose these are, but you'll recognize your own stuff. Thank you for reminding us that trade number 6 is not part of the SSC challenge, but I'll give you credit for that anyway. 5 is a sideways or a supported winter crossing or a Z3 pinch breakdown. I'll take either one of those. Notice the cost of the tight stop exit. Now you don't have two positions for the big move. That would have been an additional 1.5. It would have doubled your move today. That's why sometimes when you see me starting the next position or the reentry with 2 scoops, it's to acknowledge it, particularly when that move happens so fast. You get that supported spring and then immediately supported fall. It just 3 bars later it's failing. I'll put 2 on that in a heartbeat. And not only restate the original position, but also add the second position in a group of 2. Ken Hum, you're ready to try that. The front end, so here was a supported spring. If you follow the rules of the kata, that actually probably scratches or you get a sniper. Although I don't mind the taking the PSAR stop. Trade 3, nice work. SFC. Trade 4 could have been a stop and reverse. And then notice what happens, what should have been trade 5. Well, I think you actually got that because of the that Z3 breakdown. That looks like the same. Yeah. So good work in there. Making bank. Oh, come on. Trying to find the mouse cursor. There we go. Supported winter crossing makes bank. There was an earlier trade in there when the PSAR broke. Still good form. Get paid. The S Dow, Antonio, if you're listening to this, shrink the MACD, expand your price bar so you can see what you're doing. I'm glad, but you got long here. That's nice. In S Dow, he's kind of cheating. He's using the supported spring crossing, but in S Dow, so it's like the SFC, but in the other way. Is this the Crocodile River? Antonio asks. The Crocodile River is always the river. The river is where you always get chewed up by crocodiles. And this is a good move. Trade 5 should have been the stop and reverse for the big move of the day. But you're getting the hang of it. Same thing in Brazil. Missed. Now, this is what happens when your will gets depleted. So we got to build up our cardio because there's 3 trades in there that you didn't take that were the big payoffs. So that should have been about a 3-hour day for you. This, I think, is probably Eugene's. Let's see. Supported. Is that an SSC or an SFC, I guess? Yeah, okay. The green dot is what threw me for a loop. That so you're entering at the top of the yellow bar and then exiting at the red dot. Fine. Just note you're executing the kata correctly and correctly, correct, correct, and correct. Every one of those that fails on a big day down is a signal to get short. And at some point, you'll just say, you know what? Maybe I'll just wait for it to fail and then take the short. But correct execution of kata. This was um, Eugene teaching someone about the difference between the acceleration factor, I think, on how the different parameters of the PSAR cause you to, it could make it useful or useless. Here's an examination of the difference between the relaxed exit of the Bollinger Band mean, which allows you to get the entire red arrow with 3 positions short, as opposed to taking uh, fractional gains on single positions, as opposed to large gains on multiple positions. And then notice the big breakdown that happens at 1140 that's available. But we got to be able to take that. Let's see. Next one up. Yeah, this was just me posting Alcoa, just criminal not to take that. I think all of these were a whole series of mine where I was sniveling. Yeah, so this little picture of the buffalo herd. Watch as that picture gets bigger and closer, you should be feeling more and more uncomfortable. Um, this is a reminder that the herd can remain irrational longer than you can stay liquid. So you don't want to fight the trend. If you're going to play the counter trend, you must do it from a position of safety. That's what the supported spring crossing kind of is. And the owl certainly is. So it's a measured effort to try to carve off a piece of it. You don't want to be in front. This is the last thing the tiger Shere Khan saw before he was trampled to death by Mowgli and the buffalo herd. So this is not a place to be standing in front of the herd trying to stop them. Use a different strategy. This was Pavel from Poland, and this is him working DIA with his understanding of the SSC and SFC. And this is a kid, you're all kids to me. This is a kid who started trading a couple months ago. And here's 9R. And he was being harsh on himself because his last trade was slow to get in. Like he felt he should have gotten in back here at the S of units instead of waiting for all the way up here. And he felt he should have gotten long at the red dot instead of covering the short. Yeah. Okay. So there's 8.75R to learn a lesson. That's being on a market paid scholarship. So he's getting it. Well done. And now for the Meister himself, Ken Hum. US Steel supported spring crossing with a stop at the PSAR. He leaves that in place until the PSAR gets above his entry. Where's my pen? This almost feels like I'm doodling on the Mona Lisa. So perfectly played, perfectly played. Keeps this in place until his entry gets taken out by the Pisar, and then he can adopt the Bollinger Band mean. So in that case, you would just keep that in play. You might also at this point say, you know what, I'm going to lock in no lose plus dinner for two because you see this. And so then you might pick this up and say, at some point when the Bollinger Band mean catches up to me, then I'll use that one. Then you see, oh, here's a Z3 excursion with 2 bars, 3 bars, couldn't make a new high, starting to fail, and he strikes at Z2. So he locks in this gain and only gives up the blue box. Ladies and gentlemen of the jury, then he does a re-entry. I'm not offended. I would like this with a stop here. But okay, what he's doing. This is the difference between waiting to take out the actual price peak versus, hey, this thing couldn't even fail through the dragon and then resume. That's why I draw this right here and I get a universal entry and off it goes, or even a 1, 2, 3 entry. And now this is even less of a loss. And then I want you to notice this pattern, 1, 2, and then fail. So when this little pause here, it doesn't even rebound and go strong this way, but it goes strong that way. Supported fall crossing, or wait for it to get through the VWAP. And now you got 1.5 here. There's another 1.5 there. So instead of losing 0.75, maybe you could turn this into a minus 0.5 and then add another 1.5 here. And that's even better. Sweet. Nice scratch. After this big gap down, I'm not offended if you had tried the short. It would have kind of scratched out probably. He notices the sideways quiet channel. That would be a big blue box right there. And that's just as nice a strike as you can get. And then here is a supported fall crossing. And here is a collapsing dragon. So don't get too big for your britches there, Ken. You're moving up in weight class. Here's 3.3R in TNA in the afternoon. This little, this blue box, I think, if I'm reading that right, that blue box should actually come all the way up to here. So we should at least strive to get that to scratch. And that's probably, even if you had hit the exit here with a sniper, slippage could have gotten you there. But what I'm really impressed with is the instant reset and reshot and 3.5. And now I would say here's a potential. These are the emerging dragon entries, but here is the supported fall crossing re-entries. So one or both of those, and then a beautiful sniper exit. And then here is your collapsing dragon. And this one probably, if you wait to the ball, certainly by the time the Bollinger Band mean is violated, and now you have an entry here, or when it turns to winter. And I think that one paid off. Although I think you got that with TZA. Yeah, and here's the TNA morning trade, perfectly played. Here's the entry, standard risk. It waits for the PSAR to take out the entry. I think you could then probably move to no lose plus dinner for two, or the Bollinger Band mean. So somewhere up in here. Now, if this had gotten you out, then this one should get you right back in. So you might have said, you know what, I'm just going to take that and scratch because I had this. So I'm not offended if you take that. But leaving this in play and then seeing this thing take off, by the time this goes, I think that's where you would come and pick up the Bollinger Band mean. I wouldn't be offended by this exit as long as you get back in here. And now this is your risk. And this would be one of those where I could think about, if I got out here, this is one where I might put two back on to reestablish the size of the position. And then this could have been the third. And then that's a good strike. And that's a brilliant re-entry and a good strike. So this is 3.7. I think this could have been as much as 5. It was going to be at least 3, depending how conservative you play this down here. But that's really well done. So just continuing to do some great work there. Study his charts, the rest of you. That's everything I got at 9:30. I'll get this published and posted in the usual spot. Lots of stuff to think about today. Tomorrow's going to be fireworks. Turnaround Thursday. It's like the pre-Friday posturing. So Thursday's the big day for me, right? Take good care. We will see you in the chat room.